wonderful young ladies.
They
we spoke to.
were, and now we're excited because we very hurriedly have now on the phone and Skype Gina. And Gina, I didn't get a chance to ask you. Do you say it Levy? How do you say?
Gina Levy.
Regina Levy.
Okay.
And we're excited you are a CPA, and that puts fear into the heart of most of us.
I
And
know,
we want to
we-
run screaming with our hair on fire to the refrigerator.
We hate to tell you that.
That's why we need the cookies.
Yes. But so we feel that it's important, though, to face some of our fears and talk to financial experts. And you've got some great tips and advice for us about ways that we as autism parents can make sure that we're getting the funds that we need and using them for the right things. So let's start with talking about the mountain that everybody, well, especially here in California, IHSS. And I always like put extra letters in there. I say IHHSS, I say ISHA, like I spell
What
everything.
is happening
Yes.
this year, right?
Right.
Let's talk about what it stands for. That's a good place to start.
In-home supportive services.
Okay, so it's IHSS, and I did not know about it. When my son was being treated with autism, I did not know about it. And the families that I know that do know about it, financially, there is less ruin that happens for them and more peace and less anxiety. So super important. Now, you've got information for us. I don't even know what a Notice 2014-7 is.
Okay.
Tell us.
This
Educate
is
us.
a long history. I'll try and be brief. In the early 2000s, the IRS decided that this was taxable income to parents, and they had several different court cases and memos and whatnot that said, no, parents, this is taxable income. A couple in Ohio took the IRS to court and said, no, we believe this is substantially the same as a foster care situation, where the state has come in and said, we would ordinarily take this child and put them in an institution, but you've signed this institutional deeming waiver, and we will help you by helping through in-home support services help you to financially take care of your own child, because you're giving up the right for the state to take care of it. So you've accessed Medicaid, and Medicaid, which is Medi-Cal in California, is going to help you take care of it. So if your neighbor had taken your child in under a foster care situation, that income would have been excluded under the foster care exclusion, which is a certain part of the Internal Revenue Code. This couple took the IRS to court and said it makes no sense that our adult child, who we're getting IHSS for, could be taken care of for tax-free income by our neighbor, but we have to pay taxes on it.
Okay, so I'm catching up a little bit here. So, because what we need to have people know is that when you get IHSS, it sometimes translates into a check for you for the care that you give your child. Like if you're driving your child to...
The state is assigning your child money, and that child pays you, the parent, to take care of them.
Okay. And what you're saying is that should not be taxable income.
Because it meets the same criteria as a foster care situation, it is considered a difficulty of care payment and is excluded under the foster care exclusion.
Okay. So
that's essentially what Notice 2014-7 was. And what's important about Notice 2014-7 is that the IRS has decided, the attorneys looked at this and they said, oops, the courts were wrong. This is not taxable to whether it's a biologically related person or not. So just because you're taking care of your own child doesn't mean that this is not a state-sponsored foster care payment situation for difficulty of care payments for a child with special needs or an adult with special needs. It can be an adult. It can be even a child taking care of a disabled parent. So the important thing is that as of January 2014, when this notice was issued, that income became not includable as taxable income if you were living in the same home.
Okay. And so you won't get a W-2 for it, but
For 2015, 16, and 17, the state of California kind of fought this, and they said, no, we really think it's taxable income, and they issued some notices that they didn't really sign, and they finally went to the IRS, and they asked for a private letter ruling saying that, oh, for California, this is taxable. So the IRS came back in the middle of 2016 and said, nope, all of IHSS programs within the state of California meet the criteria for foster care payments for difficulty of care, and none of that income is taxable so long as the person being cared for and the person taking care of that person, the caregiver and the caregivee, are living in the same residence. And there's no other residence for
So
either
if they're
one of them.
family.
well, not necessarily
It
because it
doesn't
could be
matter if
foster.
it's family or not family. It could
Okay.
be a job coach living with an autistic adult.
Okay.
Okay, so it's not
So it
taxable
doesn't
income.
matter if it's family or not family. That criteria no longer matters.
Now let's say that in
So
2015.
California then,
Mhm.
in 2016, sent out, and early 2017, sent out some notices saying you can self-certify that you're living in the same home.
Okay.
A lot of people signed those SOC documents and sent them back to the state of California, and in January of 2017, the state of California ceased to consider this taxable income in following IRS guidelines and stopped withholding taxes. So for 2017, parents got a W-2 with about 1 month's worth of income and 1 month worth of taxes withheld.
Okay.
That's the last W-2 they should ever receive. Therefore, there are no W-2s for parents for 2018. Relax, you're not going to get one. You weren't ever supposed to get one. California is finally following the law that was promulgated in 2014. 2014 should have been the last year that W-2s were issued. Took them a few years to get with the program, but California is finally following federal law.
Okay, so don't be looking for the W-2.
And what do
But
you do if you paid taxes in the past?
Yeah, like in 2015 if you
pay
paid.
taxes in the past, you can file an amended return and get those taxes back on the IHSS income if it was included in your tax return. Now, if you or your tax preparer happen to use that W-2 to claim earned income tax credit, there could be a problem because you would have to repay any earned income tax credit you received because the IRS is not considering this earned income anymore.
Okay. All right, so it gets a little dicey.
There's the problem.
And this is why you would need a CPA. This is why this would be so much easier to have with a CPA. Okay, now for people doing taxes, talk to us a little bit about non-traditional medical expenses because I know a lot of people that write off their medical expenses. Other people decide that they're going to take the standard deduction. But for people who have special needs kids, sometimes it might be worth it for them to itemize. But what are the non-traditional medical expenses that we can include?
Okay. Medical expenses are defined in the Internal Revenue Code as something that's used to treat a condition of the body. So autism is a medical, physical, or psychological condition. So autism meets that definition. They must be recommended by a medical professional, meaning a physician, doctor, therapist. The code even in the regulations goes down to say it could be a Christian Science practitioner, it could be a shaman, it could be, as long as it's a recognized medical practitioner. And it has to be something that you would not otherwise ordinarily purchase. So a toothbrush is not a medical expense.
But so let's say gluten-free, let's say you're on a gluten-free, dairy-free diet.
Yeah, I'll get to that in a minute, 'cause
Okay.
that's a little different.
Okay.
But let's say you're buying a special cushion for your child to sit in to pay attention. The bouncy ball or the yoga balls or anything like that. Your child wouldn't ordinarily buy that. Even though it might be used in an ordinary home, you're buying it for a specific purpose.
Okay.
Your therapist tells you you need to buy these specific games for your ABA program. Those are medical expenses.
Okay. Okay, so it's got to follow that 3-part test. Recommended by a medical professional, used to treat a diagnosed condition, and not something you would otherwise purchase. And if it's all those 3, then you can deduct it.
Yeah, I have a case where a parent has a child who's 8 years old, not potty trained, and needs aquatherapy. They rented a house, and they purchased a house with a pool, but the child has escape issues. So they actually built an enclosure over and around the pool because the fence was not enough. So they put up this rather ugly, very hastily constructed house over the pool. And we had a appraiser look at the property before and after. The appraiser said this does not add any value to this home at all. Therefore, because it's not something they would ordinarily purchase, it was required for the child because the child cannot go to a public pool anymore. They're incontinent, and the mother cannot go into the woman's changing room with an 8-year-old boy, and the child needs swim diapers. That's not allowed. So they had to have their own pool.
Okay, so
But they had to adapt the pool for the use of the child that didn't add any value to the home.
So they deducted that then, I'm guessing.
Of that structure is deductible this year.
Okay.
The year that they expended.
Okay.
So it's exactly the same as writing off a wheelchair ramp.
All right, I like this. So we're running out of time, Gina, but let's move on to special diets because a lot of our kiddos are on gluten-free, casein-free. And that's expensive.
So it's the additional cost over normal food. So if you buy a 1-pound loaf of bread, gluten-free bread, and it's $5 a loaf, and if you were to buy 1.5 pounds of regular bread, and it's $1.50 a loaf, you're paying $4 a pound more for your bread.
Right. And you can deduct that. Yeah.
And you can
No, I
deduct
get
that.
that.
Make sense?
Yeah,
Yes.
totally makes
So you
sense.
have to figure out
Can't be the whole
the
thing.
cost per ounce of each type of food, regular and gluten-free. You take the difference times the number of units you purchased. That's your deduction.
But
I would take photos of prices of regular foods at the same time you buy your gluten-free food, so you have documentation.
Which brings up the question that I have about all of this that I would love the answer to is that when I get into that level of detail, my big fear is always they're going to audit.
They're going to audit me.
And do you know, like, are you more likely to be audited if you're a special needs family and do all this?
If your medical expenses are very high, there is a chance you'll be audited. But I've never lost an audit case.
Okay. Well, and we're going to make sure we give Gina's number so you can contact her.
Yeah, let's give people information on how they can reach you.
Okay, I am not taking, this is a very busy tax time for me. I'm not taking on additional clients at the time, but if anybody wants to contact me after April 15th and have me look at their taxes and see if amending it would make sense, I'd be happy to do that.
And how do they get a hold of you?
My email address is Regina Levy CPA at 3account.com.
Okay. Now, there were more things on the list here, and we really only have like another 30, we're past time, but you have education-related expenses, including therapies and advocacy, and then you have some new information about new tax law, including the child tax credit and other dependent credit. I think, is there any way that you can give us a taste of what you wanted to say there, especially, I know parents that are spending a lot of money on copays.
Right, go ahead.
Yeah.
Therapies should be documented in your IEPs and IPPs with the regional center.
Okay.
Because if you're audited and they want to make sure that it was recommended by a physician and it's part of a plan of care, if it's documented in the individual program plan with the regional center, that's pretty much audit-proof therapy. Because you've got the regional center signing off on it, you're signing off on it, the doctors are signing off on it, everybody agrees your child needs it.
So you could write off copays then on ABA therapy?
Absolutely.
Okay.
Absolutely. Everything that you're paying out of pocket.
And you can write off advocacy if you use special needs advocate or attorney?
Advocacy must be used to access, if advocacy is public school, you cannot, or a shadow at a public school, you cannot hire a shadow and send them to the school with your child. You have to have the school district provide that. So if you're hiring an advocate to make sure your child gets that, and it's in the IPP as being required, it's an educational expense for special education and is deductible. If you're hiring an advocate to access private school and saying that the school district can no longer appropriately teach your child, and you want the school district to pay for private school, and you need to hire an advocate to fight for that for you, that's not deductible because you could go to the private school on your own. It's not required for your child to attend the private school if the school district pay for it. You might go broke, but that's not the taxpayer's responsibility.
Okay.
Wow.
There's a big difference between
Fascinating.
whether or not you can actually access the education for your child without the advocate.
Gina, this has
Right.
all been
Thank
really
you for
helpful. So again, if people want to
making
get in
this clear.
contact with you, we got your email there, and I assume that you recommend that special needs parents work with a CPA to get the best
And
return.
If they're working with a CPA already and they're happy with that CPA, if they would like that CPA to contact me with any of these questions, I'd be happy to talk to other CPAs.
Well,
That's
thank you. That's
awesome.
very generous of you.
I'm one person. I can't handle the entire autistic population in California. So, any CPAs out there that want to talk to me, I'm happy to share.
Thank you
we
for that.
appreciate you so much.
Thanks for
taking the
breaking
time
this
to-
down.
Yes. Taxes. Yeah. Anyway, thank you so much, Gina. We really appreciate it.
You're welcome.
All right.
And good luck to everyone.
Thank you.
Thank you. We'll be
Okay,
reaching
we're
out
out
to
of
you to
time.
have us reevaluate our taxes afterwards. All right. Take care. We are
All right, we're
totally out of time.
Do you want to say
We're-
anything about tomorrow?
Tomorrow is a great show. It's like off the chain. We don't even have time to talk about it, but hopefully this show will be later on Facebook so that you guys who missed it today on Facebook will be able to watch it. Thanks to all of our guests. It's been a really interesting day. I really
Yes.
appreciate you and everybody else.
I appreciate
We'll see you
being here.
tomorrow. Until then, give your kiddos a hug from
And
me.
give yourselves a hug from me.
Bye-bye for now.